Good morning, traders. My name is Bennett Tyndall with TradingAnalysis.com, and this is our Elliott Wave Wednesday live stream. Good morning once again, traders. Thank you all so much for joining us this morning. We do apologize for a little bit of a late start here, but we do have a very special guest lined up, so I hope you guys were able to stick around. So taking a look at the left-hand side of your screen, you can see S&P futures are up ever so slightly here in the pre-market. It's been quite an interesting move following the most recent correction lower in the markets, and we're going to go through the wave count. We're going to keep it brief as we do want to focus on our guest this morning. And before we get started, without any further ado, let's go ahead and bring in the trading analysis team, and then we'll jump into the charts. Good morning, Terry. Good morning, Alex. How are you guys doing, gentlemen?
Morning, guys.
Hey, Bennett. Good morning.
What's happening? How are things in your neck of the woods?
Fine.
You guys doing well? Good, good. It's been it's been a fun move in the markets. We've got FedEx reported last night, Adobe reported last night. I don't know if you guys have been watching either of those charts, but certainly been fun. We'll bring Alex in. We'll take a look at some crypto as well. But before we do that, let's take a quick peek. I want to address, and I do apologize that our scenes are a little sloppy this morning. We had some last-minute cancellations, so things got a little started. It's a little bit late here. So let's jump in. We'll bring over the Motive Wave platform, which is our preferred charting package for any forms of technical analysis. And what I want to address here, I want to take you guys back 2 weeks. And what we're looking at is the wave count that we were tracking in the NASDAQ 100. And going into the couple weeks back on Wednesday, we were tracking a move here into green wave 3, which we were viewing as part of the higher degree fifth wave structure. From let's take you back to wave 4 here. So coming out of this fourth wave, we had a beautiful squaring to wave 2 of the same degree. We had this initial motive impulsive 5-wave advance, a nice 3-wave counter trend correction, about a 38.2% Fibonacci retracement. And from there, we were forecasting a move here in wave 3 with our members, as well as with you guys here on the Elliott Wave Wednesday live stream, to that 12,500 in the NASDAQ 100. Going into Wednesday after the show, markets did start to roll over. At that point, we said, okay, likely this third wave is anchored. We got just about a stone's throw away from that 12.5 upside price target. And from there, we were looking for a wave 4 corrective pullback to around 11.5, 11.8 in the NASDAQ 100. If I were to take you down to like a 30-minute or a 1-hour chart, you would see that the market did try to defend a 38.2% retracement of this move. But we eventually did break through that, and then we ended up breaking through what is referred to as wave count invalidation. This simply invalidates this as being a fourth wave as part of the higher degree fifth wave structure. So at that point with our members, we said, okay, we've got one of two possibilities that are trading out here. Possibility number one is, in fact, that this is simply just a fourth wave of a higher degree. So in the previous count over here, we had wave 3 anchoring into just shy of a 261.8% extension here of wave 1. Wave 4 squared up to wave 2. So we said, you know what, perhaps the correction that we're now seeing is the higher degree fourth wave, which is identified here. We went through this last week. This gave us support down to 10,200 in the NASDAQ 100. And then alternatively, this is in fact the completion of the higher degree wave 5. Both counts are technically valid from a rules and guidelines standpoint, but I just want to address that as we did have a question in regards to that fourth wave correction. What degree were we viewing it as? What did we see it as previously, and kind of where are the markets going from here? So before we jump into our guest, I do want to cover a couple of charts that I want to put in front of you guys this morning. Of course, we've got the NASDAQ, which we just went through. We've got the S&P, which has very similar implications, that being either we did complete the overall 5-wave move off of the March lows, which took us right into a traditional equality of wave 5 compared to 1 with that extended third, even with the very challenging substructure. And then alternatively, and this is what we're viewing as kind of our preferred interpretation at this point, that being that we're in some sort of a fourth wave, which still has the potential to take us lower in the markets. We looked at also the fact with our members and last week that if we do see a move to a new high here in the S&P and the NASDAQ, specifically the S&P in this particular Elliott wave interpretation, this could likely set up the market internals for that classic indicator divergence that we traditionally see at a major fifth wave top. So let's now take a look at a couple of charts which have obviously been leading this market. One of the charts that I want to put in front of you guys is that of the chart of Apple. And you know, I really have to say that coming off of this five-wave mode of impulsive decline, price action has really appeared to be counter trend and corrective, which is indicative of a B wave or a wave 2 counter trend move prior to a secondary actionary wave to take us lower. So at this point, I really wouldn't be surprised to see a move back down here to 100 here in Apple. Really not out of the realm of possibilities. Nvidia, this is another chart that looks very counter trend and corrective. The SMH has kind of similar price implications. We also have the guideline of alternation at work here, and that wave 2 was more of a sideways correction. And now if I take you off the daily, take you all the way down to a 20-minute, this would be more of a directional, kind of a zigzag, perhaps with a complex B wave. So we'll continue to track that. We do remain constructive on the markets from a longer-term investing horizon. Obviously, we're going to perhaps see some short-term volatility heading into the election season with this potentially completed five-wave mode of impulsive structure. So apologize for rushing through that, but we got started late, and I wanted to make sure we had time for our guest here. So this morning, you might have seen him last year with us. We have Mr. Julius Kempenaer. Am I saying that correct, Terry? Save me if I'm wrong here.
Kempenaer, yeah.
Kempenaer, there we go. I apologize for the pronunciation there. He is the founder of Relative Rotation Graphs, and this is a form of technical analysis that RRG Research, his company, actually licensed to, Bloomberg Terminal, StockCharts.com, Optimum, which is the charting platform that we utilize relative rotation in. Terry does a fantastic job with the sector rotation analysis. Great individual. Glad to have him back on the show. We had him last November, I believe it was. So without any further ado, good morning, Julius. How are you, sir?
I am good, Bennett. Thanks for having me back.
Absolutely. Thank you for coming back.
No problem.
Great to have you again, Julius. So yeah, it's been nearly a year, I think, since and when you were on last November, I had only just started working with this Optima platform and learning a little bit about how to manipulate it. So it's been an interesting session for me. I've learned a lot, but I know I still have a lot more to learn. So I appreciate having the master of rotations here.
It's my pleasure. Ask me anything.
I got a question. One of the questions I certainly have for you, Julius, is how did you come up with the idea originally to take what people normally have been looking at, oscillating indicators in a regular timeline chart, and turn that into an orbital plot? I think that's a stroke of genius that you had there with that.
Yeah, I'll try to give you the short version. Well, just as a heads up, it didn't happen overnight. I mean, it took a little bit of time and some, I don't know, some luck, or sometimes you just stumble upon something. At the time, I was working as a sell-side analyst at an institutional brokerage firm. And my job was to basically provide institutional investors with a view on European stocks. And I was using the Dow Jones stocks family of indexes, that's 18 sectors. And I did all my analysis on that. And the clients being institutions, it pretty much had to be relative strength, because these guys usually don't have the ability or the freedom to just say, hey, I don't like the market right now, let me go to 100% cash or 50% cash. That's just not possible for them. So my work was all geared to relative strength, and what I ran into was the fact that most of these guys are very, very busy, and when you ring them up and you call them and you say, hey, I looked at blah, 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 and they say, no, I'm very busy. What are your best 5 indexes, sectors, stocks in a sector, whatever? And the original form of relative strength doesn't really give you the option, because relative strength in its purest form is simply the price of a sector divided by the price of, let's say, the S&P 500. You get a ratio. You look at the ratio and you can do your Elliott wave counts, you can do your trend analysis, you can do anything with that ratio chart, but it is a one-on-one ratio, and the numerical value of that ratio it doesn't tell me anything, because it completely depends on the level where the sector is trading. So you actually need to know whether that line is going up or down. And then I started researching that, and you got to what Barron's does. I think it's like 12 months back. So they basically anchor relative strength 12 months back, and they say, over the last 12 months, this was the best sector and this was the worst, etc. But to me, that doesn't make a lot of sense, because you can have a situation where a sector went down for 8 months, then turned up, and it's now going up for 4 months, but over that 12-month anchoring period, it's still down. But I really like it because it's going up. So I wanted to have something that would capture those trends and those trend changes. And obviously, they don't all nicely line up. So eventually, long story short, that ended up being the JDK RS ratio. That's my way of measuring a relative trend, which I can compare not only with that benchmark, but with all the other elements in a universe. And that enabled me to actually answer the question, what are your best 5 stocks, your best 5 sectors? Because I would just rank them based on that RS ratio. We're talking 1999, 2000 at that time. And you probably remember that you were just talking about the NASDAQ. That was like 2000 was the dot-com bubble. The thing went, over the top and everything. Exactly. Yeah. So my RS ratio was like way up there. There's a trend following algorithm there. So it was way up there, and then it started to roll over and come down. And then I got an email from an Italian investor telling me, this time your system didn't work too well. And I was like, yeah, you're sort of right, because what the problem is with trend following. It goes up, but it takes a lot of downside. It takes a lot of price movement before that trend actually rolls over. So I had my table with those rankings, and I realized I need some sort of an early warning system, something that will alert me when very strong trends are, losing their pace. And in the toolkit is like rate of change and momentum indicators. They are doing exactly that. So I started playing around with measuring rate of change of my RS ratio, of my trend measure. But obviously then you get into the same problem as you have with raw relative strength, where you cannot compare it. So I ran that momentum through the same sort of filter as I run my trend to. And then I had 2 measures. I had the RS ratio and I had the RS momentum. And I was actually publishing a research piece with a table. So I had all the charts, and then with a table which was ranked on RS ratio, because I at the time I thought, and I still think, that is the most important measure, and momentum is a help, is secondary. So I had the rank, and then I could see if the RS momentum was high or rolling over, etc. But that was all in a tabular format. And then I started to play with, this is Excel with a spreadsheet that only the guy who creates the spreadsheet can read, with a lot of VBA spaghetti code. If you give it to someone else, they had no idea what you're looking at. So that was my workbench, and I was creating my reports, and I was creating those tables. And I don't know, it probably was a Sunday afternoon or something like that. I was just playing around with these tables, and I was selecting these values and going in Excel, what is it? And then, I hit on the scatter plot, and I got like, boom, oh, what's that? Because usually, as you rightfully said, we are used to time price-based charts. So all of a sudden, I had this scatter plot with a bunch of dots on it. It's like, oh, what's that? At first, you really need to figure out, okay, so what is this actually showing me? It's like, all right, so I worked it out. I fine-tuned it a little bit, and that was the first very, very basic version. It was just basically a scatter plot with single dots. But when you look at that for a couple of weeks, you say, right, okay, so this is a snapshot in time, but I really like, we technicians, we like history. We like to see how it
dimension.
Exactly. So I spent another 2 days writing VBA code to actually plot not only the last observation, but also the previous observation, and then connecting those two dots so I could actually see where it was coming from. And so I did that. So I had basically T and T minus 1, and I was sending that to my clients. And then at that time, David Keller is a pretty well-known name. He now works also at Stock Charts. At the time, he was a managing director of research at Fidelity. And he was one of the guys that took RRG in a very early stage. And we would have a call every few weeks just to talk through it. And then all of a sudden he said to me, he said, Julius, every time that last page of it was a PDF document, that last page, I print it out and I stick it on the wall. I said, why do you do that? Well, I said, after, if I have a bunch of those graphs, I put them on a stack. And when you were in high school and you had those note blocks, and then at the bottom you would draw a little man, and then on the next page you would draw the same man with his feet, and then when you did that, and then you saw the man started to walk on that note block. That's what he actually did with the stack of papers with RRGs. That's pretty cool. Yeah, we can actually
animation invention.
Exactly, we can make it move, and that's how the animated RRGs came to life and worked it out, and now it's on Stock Charts and Optima with the animation and all that kind of stuff. So
fantastic.
It's a bit long answer to your question, but I think it's a cool story.
That is, that's fascinating, and to see the creativity go step by step. That's I was there with you. I could just follow along. I was there in that timeline doing the same stuff. Unfortunately, I didn't have the wherewithal to come up with that. But let's take a look. Bennett, throw me over here on. Make me
there you are, sir.
And let's talk real quick here, guys. All right, so just for our subscribers here. We've been struggling here the last couple of weeks with a bit of correction going on in the S&P. And last week was choppy. Last week we had 3 down days, 2 up days, or sorry, 1 up day. We had a shortened trading week with Labor Day. I forgot that, but so just 1 up day. But really the key thing here is we held this 50-day moving average. I think is a very important support level here. And now we're getting a little bit of a relief rally here. The last Monday and Tuesday we got a little bit of uptrend here. In that Monday and Tuesday, sector performance has been real estate has kind of popped up out of nowhere in the lead here, but technology had been taking a back road last week, and now technology and communication actually popping back up into the front here, followed by utilities, materials, discretionary, and here's the S&P up 1.8% for the week. Similarly, here on the NASDAQ, you can see this 50-day moving average holding support. So here's our sector rotation. So, Julius, what we like to do at Trading Analysis is mostly focus on swing trades, so intermediate term trades. We let Todd Gordon at Ascent Wealth Partners worry about the long-term portfolios. And I think I've calibrated myself down to using a weekly rotation as being one of our best indicators. If we use daily rotation, it seems like the rotations move so fast that it's probably more attuned to day trading time frames than for weekly. But for what it is, that's what we've calibrated to.
Yeah, that makes sense. I can give you the background. Because this is all still based on the original algorithms that were derived, late 90s, early 2000s, and the people who took my research, being institutions, they cannot trade. Sometimes they need 2 weeks to build up a position. because they're so big. So they don't appreciate it when an analyst comes out and say, hey, you need to buy materials, and then like 3 days later say, oh, by the way, you need to get out of materials. They just
Right.
have started to get their feet
They
wet.
don't like to do that.
Yeah. So what I found, and I think what's still valid, is that what I told these guys, if I change a recommendation, that should be valid for at least 3 months. So these changes in trends, they are valid for at least 3 months, but I've seen them going on much, much longer. Sometimes the occasional, odd one out that doesn't last for 3 months, but most of the times these trends last much more than 3 months. So 3 months as a minimum, and that's based on a weekly RRG. And you're right, if you go to a daily, you get much shorter, you get much faster rotations for shorter term.
This is a monthly rotation I'm showing right here, and so I tend to think this monthly rotation would be good for those long-term portfolios, right? So like you said, you want to just sell everything. You can't sell everything, and you're managing large portfolios, and you want to, what I'm seeing here is that large portfolios want to continue to retain technology. They don't need to rapidly exit technology for the long haul, simply because we've got some short-term.
Yeah, and look at that energy one in the lower left.
Yeah, energy's been so far lagging for so long. It's pitiful, from years actually. And I was in that business. I was former. I'm a chemical engineer, but I'm retired senior economist from ExxonMobil. So intimately aware of what's going on in the energy industry right now. So feel for those guys.
Yeah.
So the weekly rotation, you're saying, is kind of good for, like, looking forward to the next 3 months, and that's kind of what we can see here, is because what I've drawn here, I like to put 4 bars in a tail, so that's approximately a month, right? Some months have five weeks, but and then we can go back and look. Another nice thing, feature I like, is the fact that I can track the date back, so I can see at a point back here, like where XLY crossed over from improving to leading. That happened back in May, right? So and then so discretionary just pushed itself way up here into the leading quadrant, May through June. Here's July, here's August. And so, even now in September, so like you said, that's already 4 or 5 months where discretionary is holding into a lead, right? So that's a good understanding of the timing of how we use this.
Yeah, maybe another thing that's interesting for the audience to point out is, if you look at the tails on industrials and materials, you see that they make something that I call that a hook. Like financials is doing that as well. Theoretically, and most of the time, these tails will rotate in a clockwise fashion. So they will bend over and go clockwise. But like what you see now in materials and industrials on the weekly, looks as if it's going like bending over backwards, and it it should not do that, but it's still doing it. And when you switch this chart to a daily and look at the tails for industrials and materials, and then you will scroll it back over that time, you will see that they will actually make a complete clockwise rotation on that time frame. So that rotation on those sectors was simply too fast for the weekly time frame to pick it up. And that's why you get that hook. But if you switch to a time frame lower, you will see that they were actually rotating clockwise. It's just not visible, or not. It wasn't picked up by the weekly time frame.
Right. More rapid turn. But yeah, so here, when we put it on the daily, I'll put 5 days there, so that represents 1 week. The other thing I try to teach our clients is also looking inside the data that you've got here is this little term called velocity, which is measuring the speed of movement from one point to the next. And obviously, being an engineer and knowing a little bit about physics, increasing velocity means acceleration. So
Yes.
acceleration towards leading is a very positive thing. So if you're looking at
Yes.
you want to look at the length of these tails relative to each other, will kind of tell you the
Yes.
relative acceleration that's going
Yeah.
on in a sector as well.
Yeah. The long tails, exactly as you say, they are accelerating, so they're good. So long tails mean that there is power behind the move. And if you have a short tail, like on discretionary right now, that is sort of stationary. That is
It's
it's in
stable.
the
It's
leading
much more
pattern.
stable in that position. Yeah.
Exactly. Yes. So it's still there, and it's just minding its own business. So that trend is going on, just going higher, and that's no problem. And then you see like materials and industrials, and to a lesser degree financials, who are now actually picking up steam with acceleration on the tails.
Right. Right. And I've been talking about that narrative here ever since I saw the hook back here early September. We saw a hook both in financials and industrials. But the caution that I put is that the difference here is a relative strength ratio compared to the benchmark, the S&P. Industrials is much closer to being in the lead. Financials has got a long haul. They got a long way to go to get back over here into the lead. So it's very early for them, but they're making up some time. I will say they're making up some time here nearly. But the caution is, I've also seen a lot of times these rotations will turn and they can go right back down into the lagging quadrant and then come back up again. So
Absolutely.
a lot of rotation does not always have to go all the way around the axis. The rotation can actually occur inside a given quadrant.
Terry,
Yeah, and
before you
they're actually the characteristics of a very strong or a very weak trend. Or let me put it right. They're the characteristics of a very strong trend. If it's happening on the left side, it's a very strong relative downtrend. If it's on the right side, it's a very strong relative uptrend. And the best way to explain that is, that when you look at a simple ratio, a simple relative strength ratio, that usually isn't a straight line up. That goes like in every chart with highs and lows and higher highs and higher
Right.
lows. What you will see is if that is a very steep trend, you see that rotation from high to low and to a new high. That if it's strong enough, it will show a tail that goes through leading, through weakening, and back up and leading. And that's the rotation high low higher high, or vice
Yeah.
versa on the left side for a weak trend.
We've seen that. We can look at technology here. You can
Oh yeah.
see technology has been toying between leading and weakening, go down into the weakening, rotate back up into the leading, rotate back down. And so just simply because we see them going down doesn't mean that we automatically assume that they're heading towards a lagging quadrant. A lot of times, and I think we'll translate this when we take a look at Elliott wave charts too, is to, these sometimes when we're moving from leading to lagging, this is just an intermediate correction. It's either a wave 2 correction or or maybe a wave 4 correction or something. And then we're going to head right back up into an impulsive move. Bennett, did you have a question?
No, there was a question that somebody had posted asking what the inner circle represented that you're comparing.
Okay, this inner circle, this Optima has the ability to set plot filters, and so one of the you can adjust the plot filter. You can either turn it off, or you can manually assign a window, or you can use standard deviations. And in this case, I've got 2 standard deviations. So what happens inside this 2 standard deviation filter is less important, I think, than the stuff that's going on outside. The stuff that's going on outside of this circle is much more extreme moves. And I think if we start looking at some of the other stocks, you'll see that we've got let's flip over here to communications. You've got a lot more density of stocks that are inside this circle. And the origin, remember, is the benchmark. In this case, the benchmark is the S&P. So in terms of being relative performance to the S&P, if you were performing just exactly as the S&P, you would be right here at the origin. So stocks that are not very far away from the origin are simply behaving similarly to the S&P. the further we get away and get outside of this circle, we have stocks that are much more, I guess they have a lower beta. Maybe we would say, and I know, Julius, you've done some studies with the beta calculations before too. So
yeah, it's basically the short answer is that the further away they are from the center of the chart, the higher the opportunity to capture alpha, because they are deviating from the benchmark. And if you're a professional investor and you need to beat your benchmark, you need stuff that's far away from the benchmark. Otherwise, you'll become an index hugger, and people are not paying you to basically, track an index. There's ETFs for that.
That's right, chasing alpha. That's what we're trying to do here. All right, so let's just touch base here. Like I said, what I find interesting happening this week, this is the first time in a long time I've seen technology actually drop out. I've got this table over here sorted by the relative strength only, and we're neck and neck here with discretionary. And like we talked a moment ago, the very short tail that we see here in discretionary means there's not a lot of impulse for discretionary to leave where it's at. So I think we're going to see consumer discretionary retain long-term leadership, as well as I'm seeing increasing leadership here in materials. And we've been chasing this industrials for several weeks now, following this hook, and industrials has pushed itself back up in here. Now, get me wrong, but industrials transport sector usually means improving economic conditions, or it's typically been considered that. And I think if we take a look in the industrials, and what mostly has been leading, and we got good earnings report out of FedEx last night. Here's FedEx, UPS. A lot of this has been driven by air freight, logistics, even rail, Union Pacific, Norfolk Southern, CSX. You can see all of these guys got a nice northeasterly heading here, meaning they're gaining both relative strength and momentum. We've even got John Deere here in the machinery subgroup pushing higher. So, Julius, one of the things I do, we not only take a look at the sector, but we'll drill down into the sub-industries inside those sectors. So let's take a look at the transports ETF, which is a sub-industry group of the XLI. And I've, for purposes of simplification, only got about 20 or so of these stocks. And these are all ranked by market cap. I'll pull them in here and take the largest ones. But look at this group here. Look at this group. This transports ETF group here. 17 of these 20, I think there's 20 in here, are beating the S&P. That means they're, in terms of relative strength, they're all positioned over here to the right. Some are down here in the weakening quadrant, which is okay. But there's so many of these guys up here in the lead, and we've been watching this unfold for several weeks now, as we saw UPS push higher here. But it's Atlas Air Worldwide. I think I was reading an article where really Amazon.com, I think, leased an additional 20 jumbo jets for air freight out of this company right here, which really gave this company its big boost. And I see that continuing. A lot of these trucking firms like Saia and JB Hunt, and then now you're starting to see these rail, Norfolk Southern, Kansas City, Union Pacific. You're seeing all these guys. So rail traffic transporting the goods and materials that the consumers still need during this COVID crisis. So, just simply because we went into this COVID pandemic, people didn't stop buying the things that they need. They just changed the way they buy them from the brick and mortar stores to more of the online purchasing. And but the materials still need to get to market, right? So air freight and logistics is doing well. I'll tell you one more piece of a thing. The delivery service consumes a lot of energy, and with the low oil cost and low energy cost, this one of the big fixed costs for these transport companies is fuel, and with low fuel charges, these companies are able to reap a higher profit. So let's take a look here at this materials sector. So In the materials sector, Julius, there's been two sub-industry groups that I've basically been pointing out. One is this the chemicals subgroup, and this chemical subgroup being here led by Air Products, Dow, DuPont, Sherwin-Williams, even LyondellBasell trying to cut across here, I think. And then look, LyondellBasell is a big petrochemical company. Is that Dutch? Is that a Dutch firm? Is Basel part of a?
Well,
I don't
it's
know if I,
NV is a Dutch abbreviation, that's for sure. So maybe they have Dutch origins, but I don't
yeah,
think
yeah.
they're
I
like.
think it. I think this has a Dutch origin. So I just a little bit of home there for you. But yeah,
They're not
I've
quoted on
been
the
telling.
Dutch exchange.
And Celanese, you can see Celanese way up here, PPG, Dow, right? So the other sub industry group is obviously the miners, right? So and it's been Freeport Mac. I got to zoom way out here to catch Freeport McMoran. Earlier this
Yeah, that
summer,
was
it was Newmont Mining, right? So we bring the rotation back into all the way, Jesus, all the way back to March. We can see Newmont pushing dramatically higher here in the rotation, well high, and then took a period of time out. And as it took a period of time out, we saw Freeport McMoran take its place. You talk about here. I'll give you a pair trade idea for your next show
absolutely.
there,
Yeah, I was
Julius.
just going to say that.
Freeport and
That
Newmont.
yeah, that setup, what you just showed, is where Newmont Mining is in weakening and moving left, and Freeport McMoran is pushing into leading, moving right. Those are great setups for pair trades.
Yeah.
And basically, if you, I don't really like to talk about signals, quote unquote, but if you would like to have a signal, it would be, for me, it would be when they cross over the vertical axis, and it doesn't necessarily have to be the 100 level on the RS ratio. It could be whenever they are crossing a vertical line. So if you scroll back a little bit, and so like probably here, whereas Newmont is now, so if you draw a imaginary line from FCX down to NAM, so they're like right at this time they are crossing over. That would be like, if you want to talk about signals, that would be a signal to be long FCX and short NEM.
Very good. Very good. Good idea. Let's take a quick look here in the gold miners index. So what's been happening in gold pushing itself to all-time highs near 2000, and that started this summer. So we saw these gold miners shoot rapidly up here into the leading quadrant, but not all of them. This is back in April. So back in April, we had about half of them down here in the lagging quadrant, and we'll animate this here a little bit as we move through May. We see more and more of them. Look at the huge rush. This is a gold rush right here. These long tails, high velocity. These guys are coming up fast. There's a big movement, and look at the collection. Look at the collection all the way by June. By June, we had nearly this whole group pushed up into the leading quadrant, and then we saw some give up some momentum. But there's that hook. There's that little hook again right there. You can see that hook happening right here on July 24th, where their momentum has started to shift back to the north, and here they come again. So very interesting. Silver. Alex is going to talk a little bit about gold and silver. We'll let him come on here in a minute. But Alex has also been following the gold-silver ratio, and I think this collective group up here I've kind of analyzed probably has a higher yield of silver than some of these other guys. It's kind of been my inkling as to why they've been in a outperform. There's a little bit of a dichotomy here in the gold miners, and then not everybody is mining the same quantity of materials and different ores, right? So some of these are copper. I think Freeport McMoran is mostly into copper and molybdenum, more so than gold and others, but you got to dig into that. So very interesting. Real quick, technology guys. Technology, AMD, Nvidia. We've seen Nvidia take a little bit of a pause and a back street here. Nvidia is down in the weakening quadrant, but I will tell you again, like we said, look how short the rotation is. I wouldn't sell out of Nvidia. I would like to add more position as if the market does tend to correct. Apple. Bennett showed you the wave count in Apple. We see Apple with some declining momentum right now, but relative strength in Apple is still very high on the table at 116.8. And we've got Salesforce.com CRM coming up quickly here. Adobe had announcements. Adobe had earnings announcements last night, and I think they were very positive. I wouldn't be surprised to see this this arrow here coming down. I wouldn't be surprised to see that start to hook and come back up if we see Adobe continue its growth there. All right. Let's drop this on here real quick, guys. If you want any more information on how to use this Optima platform, here's the website. This is our sales page at Trading Analysis, so you can get more information about the Optima platform, and we would love to have you join us here at Trading Analysis using the Optima and learning how to do this kind of stuff. So, all right, let me give it back to you real quick, Bennett.
Yeah,
Alex,
very good, Terry. I appreciate it. Hey, Julius, before we do carry on, are there any charts that you brought with you today that you'd like to go over, or any work that you'd like to talk about?
Oh, I just with Terry. I mean, we'll just stick with what he's showing because they're pretty much the same as what I'm looking at. I can give you a little a hint, Terry, because there is another feature in Optima that no other platform has. Well, Bloomberg has it, but if you can Terry take that screen back for a second?
Yeah.
Sure.
And if you bring up that, if you bring up that, just pick one RRG. Doesn't really matter. Just take the sectors, for example. You remember when we spoke about that you can have the rotations on the right or on the left-hand side, and they continue to rotate in the good or the bad part. Because right now you have the colors of your tails, I think, set to random. If you go to tail style, where is that?
There it is, right there. Tail color.
Yeah, do that.
There
tail
we go.
color.
Yeah, we can make our labels actually match the colors, and so it helps sometimes
No,
when you're.
I mean something different. If you go to that setting, to that properties of that chart, tail color, label. Oh, sorry. No,
I either got single color or tail color.
No, let me quickly see on my own where I can. You have
learning,
you have label. You have
feature.
color style. Do you have that?
I have label, color, style. Yeah, it's either
style.
single.
No, one lower. Color style. One lower.
Right where your mouse is. It says random currently.
Oh, this
there
one.
we go.
Yeah. Set that to trend bars. And what you see now, that is an additional algorithm that tries to pick up on really strong or weak trends. So as long as the tails remain green, we feel, or the algorithm feels, that it is still in an uptrend and is just going through a temporary setback, and the odds for, let's say, PayPal and Adobe are pretty good to curl back up without hitting lagging. If you look at Microsoft, that's orange. And that's when the algorithm says, hey, now we are getting into the danger zone. This could move back. Yeah, so you probably have your candles here are already in those trend bars. They're now translated into the chart as well. So Oracle.
Let me pull this back up here again. So here's a price chart of Microsoft. So what we're actually seeing the prices underneath the 50-day moving average and the 20-day moving average. So that's a little bit of a weak. weak signal
Your
there.
candle colors, are they trend bars or are they quadrant bars or something different?
Oh, those are actually probably on the daily. Let's go back to that again. This is daily. Let's put that to weekly. These
Yeah,
are
but
RRG bars.
okay, are they trend bars or quadrant bars?
They're quadrant bars.
Okay, if you flip that to trend bars, they will match the ones and they will stick with the trend a little bit longer. I find that a very
So
handy
change this
utility.
to trend bars. There we go.
Yes. Now, you see
Ah,
now
look at that.
you had those orange periods which would like sort of visually give you a warning signal, but the trend bar says there's no problem with this. It's still a very nice uptrend. And you can match that. And did you actually know that you now have that chart there? If you would position the chart next to the RRG, and you give them, you have your chart has a red, is in the red group with that little notch there on your top right. You have a red, I don't know what that.
Yeah, they're linked. Yeah.
Yeah. Okay. So when you move the RRG, you will actually move it will move the vertical bar on Qualcomm, and you will
Yes.
see where they, for example, move exactly that. So now you can actually
So
make the connection.
As you
Exactly.
animate, you can see a marker line there. Yeah, that's pretty cool. Yeah, there are a ton of features here in this Optima platform, and there's so many that we don't have time to talk about today. So
No, I get it, but I think because what I feel is very important is RRG should not be a standalone system. You should actually combine it into a process, and these type of tools will help you do that. And as we discussed before the show, how cool would it be if you would have your Elliott wave counts on top of those tails? So the last tail would show like a 5 or a 3 or a corrective 3 or whatever the Elliott wave label would be. If you could plot that on top of the RRG, you could see the interaction of a lot of Elliott wave counts in one chart, whereas you would normally have your Elliott counts only on one chart, and you would need to flip to another chart to find another Elliott wave count. If you plot them on an RRG,
that sounds like a project for us to work on.
I was going to say, it sounds like you guys have your work cut out for you. I love it.
So anyway,
that would be nice.
That was a bonus for
Perfect.
today, a little addition.
Oh, I appreciate it.
Cool.
Thank you so much, Julius, for filling us in there.
To play with.
It's a great platform.
All right, Alex,
I think
real
Optima
quick.
has been a
running out of
fantastic
time
piece
here.
of software. All right, Alex, the presenter is coming your direction, sir. You can see markets are open. Nvidia is pushing lower. We've got a short-term short position on in Nvidia with our members, so keeping our eye on that here in the background. Alex, sir, whenever you are ready, the screen's coming at you.
Hey, Benny, thank you. So after this, I also enjoy looking what Terry does on RRJ and Optima. It's really a kind of a scientific add-on on the Elliott wave. I think these two can work very good. So in general, let's look a little bit of a macro overview. Let's start with the dollar index and our wave count, which we have for the last, I will say, few months, is still working nice. We are seeing a wave 1 up in 2, potentially down in 3, triangle in 4, and completion of this move in a wave 5. So we are expecting either from here or a little bit lower, because this also can turn out to be a flat. I was actually telling last time I want to see this zone to be crossed on the upside. Today we have a Fed, so we will see if we are going to get some volatility in front of it or after it during the press conference or before that will break this resistance zones and try to carve out 5 waves in this A wave, which will actually mean that we will start a larger correction in dollar index. And then, as I said from also a few months back, I'm expecting dollar to continue lower to the next designated levels after this correction has finished its way. Let's look. It's a mirror image. So the euro, we can look the euro also, which is a mirror image of our dollar index wave count. So let me just. I came down to the office today, so let me just get around these charts. Just a second, please. I apologize for this.
Yeah, no worries, Alex.
Yeah, it seems to me that okay, it's here. So euro is in the similar position. So we are looking for this 117, 118 levels, 119 levels. We are basically going sideways for a long time. Any break of these levels, more or less to the downside, will be a bit sustainable one. And on the upside, I don't expect a euro, if we penetrate these upside levels, to have a huge potential on the upside. I'm expecting a very quick reversal from 120 or 121 because the trend is already finished and this will be potential the end of it. So in that respect, if we break the other resistance or support levels down to 118, I think the correction is going to be cemented and that we are going to see 113, 114, 114.50 levels in this ABC move down in a wave 2 or B, and then continuation on the upside. We are also seeing some of our wave counts also developing to its final destination. This is our longer term wave count on dollar yen. We were looking for a complex WXY correction, and I think that this is correction is now fairly coming to an end, a little bit lower levels around 104, 113.50, 103.50, and from here we might see an impulsive bounce to the upside and continuation. Probably something will happen in the real yields, I guess, because if we have this bullish wave count on dollar, because the dollar yen didn't follow actually S&P on the upside during this COVID crisis. Actually, it was following dollar. So I guess we will see the change in real rates, and that will spike from this level potentially dollar yen to go higher. If we look gold is actually exactly where we were looking, and it's still sitting there. So we are still here in this triangle, which is basically very near to terminate. So also we can look here, this also can turn into A, triangle B, down in C, a little bit lower, okay? But anyhow, we expect one more push higher in this wave 3, which will, I think, will be end of this move on the upside. So why I'm so optimistic much more on silver than on gold, because on higher term wave counts, we have wave 3, 4, and 5 to unfold. And then on silver, we have a little bit more upside. So silver is also from the lows following our wave count very nicely for now. So we have a wave 1, 2, up in 3, consolidation in 4, one more push in a wave 5, and then I expect a larger pullback. And that's what we are tracking in our gold and silver ratio, because this ratio is telling us that for a short period of time, gold will outperform silver, and that will be exactly this correction here. But then afterwards, silver will be much better play than gold, because it has much more valid and longer upside ahead than gold. So watch on these guys. I think this pullback, when and if we see it, it's going to be a very nice entry and very profitable one on the silver longs. Cryptos are also tracking our wave count that we have been suggested a long time ago. We are looking for some type of a B wave pullback and a C wave pullback. So we are still in a corrective unfolding here in this potential wave 2. We still stay bullish on the crypto currencies. We are looking for some a little bit of a correction, complex one or a simple one, that we'll see. And our Ethereum wave count still worked quite nicely, that we presented a few weeks ago as well. We was warning the clients and the members that we are going to experience a very big move down, which was actually 20-30% on the downside, and we expect one more leg soon to this support level between 240 and 260, and that I think will be a decision point for Ethereum as well. So for most parts, our longer term outlook is working pretty fine. So we are going to stay to track it and inform you guys what's going on with all of this that we present you in the FX and the crypto space.
Very good. Much appreciated, Alex. Thank you for the quick rundown. We did get started a little bit late this morning, so we apologize for keeping you guys. As you can see, the markets are open. Julius, thank you all so much for tuning in, and Julius, thank you for joining us. If you guys are interested in learning more about Julius and relative rotation graphs and relative rotation analysis, you can check out RRG research at relativerotationgraphs.com. Julius, thank you so much, sir. It was a pleasure having you on again.
Thank you, Bennett. Anytime you guys want me to be here, I love talking to you.
Very good. Thank you again.
Certainly. We'll try not to wait a whole year next time. We'll get you on a little bit more frequently, because I feel that we got lots of interesting things we can pick out of that brain of yours.
We'll have that chat, and I'll make your head spin.
Sounds good. Alex, Terry, thank you guys so
See
much.
You, Alex. He's down there somewhere.
Hey, his camera fell. It's all right. It happens. It's been one of those mornings.
Oh my God.
I'm
sorry, guys.
It happens.
Yeah.
So guys, hey, if you enjoyed the content, be sure to give it a thumbs up and subscribe with notifications if you want to stay up to date with what we're doing. You can check us out at tradinganalysis.com. And again, of course, you can check out Relative Rotation Graphs, RRG Research at relativerotationgraphs.com. Thank you all for tuning in. Be safe. Stay healthy. Gentlemen, we'll catch you on the next one.
Thanks, guys.
Thanks again, Julius.
Bye-bye.
Thank you,
care,
Julius.
guys.
See you guys.
We'll see you all next week.